Hi, this is Paul from globaltradingsoftware.com, and this is a futures trading tutorial with 6E Euro futures. Now, a lot of traders try to overcomplicate strategies. With a currency, currencies respond to points of data, especially the euro. Euro US dollar is the biggest pair, and it will really respond to open. So the gold pit open in Europe, the London Stock Exchange open, the New York gold pit open sometimes, and maybe sometimes the New York Stock Exchange open. But predominantly the biggest force, if you like, that actually moves this futures is during that European morning. So if you're in the US, you've got to get up early, you've got to trade these opening ranges. And yes, we have harmonic patterns, we have the xBratAlgo, but with currencies, let's just keep it simple. Let's use the xBrat range breakout trading indicator. We're going to use the bias depth heat map for confirmation, and we're going to use the manager to manage it. So I'm going to go through 3 or 4 different examples here on how to enter, how to trade, but predominantly you will see that the biggest trades, the best moves are from those European opens that gives us that momentum during that European morning because there's more people trading it, basically. So this is the ThinkorSwim version of our indicators, but they're also available for lots of other platforms. Please check the links below the video to look at this. So let's go through this. So European Open, we're on the 10-minute time frame. So currencies perform better with this opening range on the 10-minute time frame. So we see the European gold pit open here at 8 a.m. European time. We get the range defined. It's colored in green. We're only looking for the long breakout here. We can see as we're going into this, all 5 time frames here on the bias depth heat map are green. The top one is grey because that's lower than 10 minutes, so it's not counted. But you can see all going up time frames as you're going down. You will see in depth there's all 6 time frames green, so we're good to go long. We're going to go into the London Stock Exchange open, which is an hour later. We get that opening range again. Look at the bias depth heat map, all green. We could add when we pop out of here as well. Initially for me, my stop is below that European gold pit open there. That's where my stop is there. It comes back down, tests and goes through, and we're in the trade. So second entry, if you like, so adding more contracts, comes back down. Now this is where the manager really comes into play here. We pull back on lower than average volume, these blue dots underneath. So this is time not to panic. Also, the ribbon here with the manager is still green. So it's telling you not to panic and stay in on this pullback. This is what happens. We move up and we have a massive blast towards the New York gold pit open. At this stage, for me, always closing before the New York gold pit open is critical for me because that's the impulse move. As you can see in this case, we were pretty flat then going through the New York gold pit open and the New York Stock Exchange open because more traders trade the euro during the European morning. Let's have a look at another example. Okay, in this next example, we're going to really show you how data can affect, so US data can affect this as well. So it's not just trading those big moves during the European morning. Sometimes we don't get enough data to move us, and in this case you can see here European, we opened and the bias is green for that opening range, but it went short, so we don't take the trade. Then the London opened, the bias is short, but it goes long, so we just don't take the trade. Then we get the New York gold pit open, bias is short. We're already in that London open, so the ranges are mixed. This is not conducive to really good breakout trading, but we wait for data. In this point here, which is 1600, which is 10 a.m. EST, we had data 30 minutes after the market's open. So data will affect the US dollar. The US dollar is linked to the euro. So therefore, then we get that move and we can trade this. But being sensible here, this is when the data comes out at 1600. We start to move up out of this New York Gold and London, but those two ranges are mixed together. So we're not interested in that. We're interested in the momentum building and pushing through this European Open from the morning. Look at the bias depth heat map. We're almost all green there. We go long. That's the move. Okay. So again, it's about understanding data points as well. So we had no real data in Europe. It was sideways. We were waiting for this big data point, and it affected the US dollar to go down. Therefore, the euro went up, and we cleared all of this mess. We pushed up through the European opening range here. The bias was green, so we're looking for the long breakout. We were backed up by all of these greens on the bias depth heat map, and then we're long. We're not just long, but then with the manager, look at this pullback, lower than average volume. Don't panic. Starts to move back up again. Lower than average volume pullback. Don't panic. Moves back up again into the close. This is the point of the decision where you make now. Do I carry this over, or do I just take this huge profit? At this point here, we do continue to move up. The ribbon for the manager never turns red, stays green all the way into the next day's European Open. So you could have carried that through quite easily. But the main point of me here was to look and try and find an example where we get US data that affects the US dollar, and that's the catalyst for the move. And you know, this went range bound, but then it broke out of that range. It broke out of the European gold pit opening range and then went hell for leather, and that's the trade in this instance. Let's look at one more example. Okay, in this last example, everything's in free fall right from the European gold pit open. As we can see on the left here, European gold pit open, the range is defined, it's colored in red. We're looking for the short to break out of there. At this point here, we are all the time frames bar one. The one's neutral at the higher time frame, which is the 2 hour. So we're pretty much all bearish, but we can wait if we wish. We've got the London Open, don't forget. If that momentum is going to continue, that US dollar strength in this case, because euro is going down, then we can trade that open. So we get the London Stock Exchange open and the European Stock Exchange as well, and range is defined, it's red. We're going to go short when it breaks out of there. In this case, all time frames now are red, so we've got a good sort of confirmation, and this is what we use the bias depth heat map for, is confirmation that we can go short. We go short, little pullback here, lower than average volume, comes down, goes sideways into that New York gold pit open. I'm looking at this pullback into the gold pit open, and we're lower than average volume. And at this point, make the your trailing stop reasonably tight, just in case we get some US dollar weakness at the New York gold pit open, and we move up. In this case, no, we got the range defined New York gold pit open here. It's colored in red, so it's bearish, and we continue with that short trade. So we can add at this point as well. You know, our first entry was all the way up here. We can add when it breaks out of that New York gold pit open range, and then we're going in as well. So we're pulling back. Again, the ribbon doesn't turn green here. Continues all the way down into the close. So again, another type of strategy with this opening range. In this case, once the momentum goes, it just keeps going all day. Getting in that trade early in the European or London Opens are very, very important. If you can't, if that momentum's still going and you're just getting up for that New York gold pit open, you can still trade that range down. But for me, I live in Europe, so it's easier for me to trade that and then add on this sort of instance, in this case where the momentum just keeps going and those ranges are breaking out. Hopefully that helps. Check out the links below for the xBrat range breakout, the manager, and the bias depth heat map.